Welcome traders to this Elliott Wave Street trade review. I'm Juan Maldonado and today we are going to talk about the dollar-yen and this fantastic trade and how to trigger a trade applying the Elliott Wave concepts. Let's start. Here we have the dollar-yen. The dollar-yen did a lot of volatility, showed a lot of volatility this week. The wave 4 green was able to move inside the wave 1 green. This is called a diagonal wave. When the price is moving up so fast, there is no way of finding a sell trade because that's where you are going to lose a lot of money. Trying to fade the strong trend always is a bad idea. Yes, you can see probably here divergence on your favorite indicator as the MACD, the stochastic, or the awesome oscillator. But at the end, you're gonna lose a lot of money trying to find the end of the wave 4. Same if you start adding Fibonacci levels, are going to make you lose a lot of money in this type of setup. So you have to be extremely careful because the Elliott Wave theory can become your best friend, your best option of analyzing the markets, but also if you don't apply it correctly, you are going to have the Elliott Wave theory as another waste of time and money project. And if the trader is not using the Elliott Wave theory properly, is gonna make the trader lose a lot of money, and of course that's not the idea. Almost as everything in technical analysis, if it's not applied in the right way, is going to be a waste of time and money for the trader and a lot of frustration. I have been trading using Elliott Wave since 2008 professionally, and of course I have been seeing a lot of cases and the trader loses a lot of money trying to find out how to properly use the Elliott Wave theory. Well, when you have this fast move, never in your life try to find the end because it's too difficult, almost impossible to have a good trade against the trend. In this case, we have the wave 1 down here. And that's a beautiful thing because when you have the wave 1 with a 5-wave sequence inside, you can start getting ready to sell after the second wave. This trade is different because you are already trading with the trend and not going against the trend. This trade is easier, this trade is better. However, my problem with this trade was that I wanted to sell here at the 145.60 area, 70 area, and I wanted to leave a stop loss, a protective stop loss above this high. My problem with this setup is that the stop loss was nearly 100 points, which is huge. I usually trade with 30, 40 points at the most. But 100 points is huge. And you may be saying, yeah, but you can adjust the 100 points to be a 1% of the account. Yep, that's right. But the problem when you are using that huge stop loss is that you need a huge move in order to have a one-to-one risk-reward trade, and that's a lot. So in this particular case, what we did in the membership, let me show you the trade. We have a new Discord channel for Elliott Wave Street members where I share my trades. So here we went short. This was December the 13th, 145.65 with a protective stop loss at the 146.05 and a take profit at the 142.50 area. That was the end of this second wave. The next target will be here, the previous low, but as a conservative target, I always like to trade conservative at the 142.50. Anyways, a huge trade, close to 300 points. So then, when we have here the stop loss and we have here the entry point, this is the risk. So we can have almost a 1 to 10, a little bit less than 1 to 10 risk-reward ratio. This is a good trade, because you say, okay, I can lose 1% or less of my account and I can make 8% or 7% or 5% if you book partial profits of this trade. So it's a good deal. So that morning, this was during the morning and the price started to sell off. And right there, we got to the one-to-one. I always tell my clients, we always are looking for conservative ways of managing the trade. Once the trade reaches the one-to-one risk-reward ratio, is a winner. And no matter what happens next, you are not going to let that trade become a loser. So there are different things that you can apply in order to make sure that that happens. For example, you can close half of the trade at the one-to-one risk-reward ratio. That's something that I like to do in my personal trading, and keep the original stop loss. There is another option. You can keep the whole trade but move the stop loss to the break-even. That's a good option as well, but I don't like it because sometimes the noise can take me out and then the price continues in the right direction. There is a third option that you can take out a third part of the trade out and slightly move the stop loss. Of course, you can pick your favorite, but make sure that always when your trade reaches a one-to-one risk-reward ratio, it's already a safe trade. Then the Fed was coming that afternoon. So we already have a safe trade. We are not going to lose money because we already booked partial profits or whatever. So we are relaxed. You know that with the Fed, anything can happen. The price can move up strongly, and in that case, we will be at the break-even. And in case that the price moves down as we expected, we make good money. So at that point, we don't have any risk. The price keeps selling off, and we got the Fed, and we got this beautiful leg down in our direction. Okay, that's great. We wait for the first target. There we go, 142.50. So we reach our first target, 142.50. But remember the beauty of this trade. At the beginning, this was the risk. At the one-to-one risk-reward ratio, we were already in a winner. So from here, if the price started to move up because the Fed was saying this and that, some of those things that are completely out of our hands, we will be out with a break-even. And if things worked, as is the case here, we got this beautiful trade to our target zone. The second target for the traders that were a little bit more greedy was the previous low. Of course, I explain this every day on the daily video. The price keeps selling off, and there we go. Price hits the target, and we got the price hitting the second target. Of course, after that, we have to be careful because it's a clear liquidity zone from the big guy, and the price is likely to start to build in the way forward. We got the price moving absolutely sideways, and the price built the way forward. And of course, that's it, right? So in case that you didn't book your profits, seeing this way forward, that's it. You have to take out the trade because that was the position, the swing trade position here. Probably you can start looking for another sell trade, whatever. So traders, it's important when you are using Elliott Wave. First, trade with the trend. Don't try to fade out the end of the trend because most of the times you're going to lose a lot of money. When the trade reaches a one-to-one risk-reward ratio, make sure to do whatever you like because that's a winner. Book partial profits, take out a third part of the trade, whatever you like, but make sure that that's already a winner. And also, there is something else extremely important. When you learn something new, when you go to school, when you go to the university, whatever, and you find your first job, you believe that you know everything because you pass some years in the studying in the university. But when you face your first job, you find out that you don't know anything, right? Same happens in trading. But the problem is that most traders are not having that institutional experience. And of course, that makes harder things, and that's why the majority of traders are losing money all the time because, yeah, they could know the Elliott Wave theory, they could know momentum, they can know everything about volume, but if they don't learn how to correctly apply those concepts in real life from a professional trader, it's going to be almost impossible. And that's what we do on Elliott Wave Street. So if you want to live that experience, if you want to be part of this process of learning how to do things on the real life, on the real markets, because I share all my trades with you in the Discord channel. We have this fantastic Discord channel where you will get access in the membership. Plus, you will get the point of view of the markets every day to master your Elliott Wave techniques, to learn how to apply the concepts. So let me show you what we have here. On elliottwavestreet.com, visit the membership tab, and here you will find our 3 plans. We offer the forex, the stocks, and the full access membership. We cover all these instruments on a daily basis. You will get access to the Discord channel and to the education. Inside the education area, we have a lot of courses. We have the Elliott Wave Crash Course, the Candlestick Elliott Wave Course, the Momentum Course, the Price Action Course, and more. And you can access by signing up for the trial, just $19 the first month, then $75 until you cancel the membership. You send us an email to cancel before your payment date, and you will love it. So you can trial the forex, the stocks, or the full access for the whole month just for $19. There is also another option for international clients outside the US to sign up for the scholarship. So we have a broker that can pay for your membership accordingly to the deposit. Here are terms and conditions, and if you like to take this option, here is the PDF with instructions. Traders, if you have any questions, here on top is our WhatsApp number, our email. If you have any questions, we are here for you. Please have a fantastic start of your trading week. I'll see you soon. Take care. Bye-bye.